Coming up on Market to Market, we take a closer look at rising farmland prices. We also profile the winner of this year's World Food Prize and get commodity market analysis with Jeff French next.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, December 23rd edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The effect of the bump in interest rates on the overall economy can already be seen in investment for big-ticket items like single-family homes. On the heels of declining confidence by home builders, the Commerce Department issued its look at the housing market. Construction of new homes, an indicator of future investment in other large-ticket items, fell 0.5% in November, continuing a 7-quarter decline. Now, over the past 12 months, the number of new homes being built has cut 16.4%. The number of building permits, another measure of consumer confidence and the ability to invest, dropped 11.2% in November. Now, when compared to a year ago, the number of permits has plummeted 22.4%. Blizzard conditions and deadly winter storms dominated the weather forecast this week. Now, in the wake of the storm, some of the most fertile ground in the world is covered by several inches of snow. Even as the land sleeps under a winter blanket, its value continues to grow. Peter Tubbs has more.
Farmland values in Iowa saw huge increases in 2022, mimicking increases in farmland values nationally. The Iowa State University Land Value Survey, which has been gathering land value data since 1941, reported the average value of Iowa farmland climbed 17% from 2021 to 2022 to over $11,400 per acre. Adjusted for inflation, the new value surpassed the 2013 record price. While inflation in the U.S. economy was part of the price increase, high commodity prices, limited land supply, and low interest rates were the driving factors in the value growth.
If we have to point to one factor, it will be the much higher commodity prices that led to a significant increase in farm income that they can use to bid on the land market as well.
The Iowa State Survey reported even larger increases than the USDA Land Value Survey that was released in August of 2022. That report revealed 12.4% growth of all farmland in the U.S. and 14% growth of cropland in the country. The value of cropland in the U.S. has risen over 82% since 2008 to over $5,000 per acre. Despite the average, a recent sale of 73 acres in Sioux County, Iowa, topped $30,000 per acre. From Market to Market, I'm Peter Tubbs.
Norman Borlaug's legacy of research that led to the saving of more than 1 billion lives is celebrated each fall in his home state of Iowa. The accomplishments of those in agriculture who have taken the concept of feeding a hungry world to a new level are recognized with the World Food Prize. Cynthia Rosenzweig, this year's laureate, has taken the relationship between food and climate to new heights. She spent much of her career studying the relationship between reducing greenhouse gas emissions and food production. Her work in climate change and its effect on food systems has earned her what is often referred to as the equivalent of the Nobel Prize for Agriculture. That journey is the subject of this week's cover story. From her start in New York, through the time she spent in Europe, followed by a return to the States and her current work with NASA, Cynthia Rosenzweig has kept a central focus on climate change and how it relates to growing crops. While working on her PhD, she contributed to the Environmental Protection Agency's first assessment of the potential effects of climate change on the environment, which later led to the basis for the United Nations Framework Convention on Climate Change.
My first peer-reviewed journal article was in 1985 in the journal Climatic Change, and it took the projections coming from the GISS climate model, and it was an expert system. It was a different kind of model. The model that we used, that I developed there, was an expert system to give the rules for where different kinds of wheat can grow.
Rosenzweig's research was the basis for the United Nations 2015 Paris Agreement, a legally binding international treaty on climate change. Just a few years earlier, her work on creating a standard for climate and food production modeling led to the formation of the Agricultural Model Intercomparison and Improvement Project, or AGMIP, an organization of experts working to improve the predictions and performance of world food systems in the face of an ever-growing climate crisis. AGMIP's detailed models and data guide policymakers and stakeholders to implement farmer-focused strategies that improve global food systems amid the impacts of climate change.
Now we're all working together so that we can nail uncertainties, we can understand the processes, we can improve the models, and thus improve the projections, so we can develop adaptation strategies for all the different regions of the world.
20 low and middle income countries are already carrying out many of AGMIP's initiatives with the help of the organization's more than 200 policymakers and practitioners. Real-world implementation is already happening in Pakistan as leaders update land use planning tools and crop cultivation information for local farmers. With AGMIP, Rosenzweig led teams in sub-Saharan Africa to develop a regional integrated assessment methodology for climate change impacts. Stakeholders in Ghana and Senegal, among others, spurred the research and development for regional plans to help build food capacity. Now, these same tools are being used to make farming and food systems around the world more resilient to substantial shocks like COVID-19 and weather extremes. For her work in this field, Rosenzweig was awarded the 2022 World Food Prize at the laureate ceremony, which took place last October inside the Iowa State Capitol in Des Moines.
Food systems are emerging at the forefront of climate change action. We now know that climate change cannot be restrained without attention to the greenhouse gas emissions coming from food systems. But at the same time, food security for all cannot be provided without resilience to increasing climate extremes.
Rosenzweig took a moment to thank those on the front lines of AGMIP.
I salute the members of this network for their tireless work, helping their own and other countries to achieve food security, both now and in the future, under changing climate conditions.
She also issued one last challenge to the global audience about the future of feeding the world's children.
We need to do everything we can to ensure food security and a livable planet for them.
Next, the Market to Market Report.
We are recording our program a few days early to allow our staff and crew to travel safely during the holidays. Predictions of a blizzard and the conditions in the U.S., as well as dry weather in South America and a cheaper dollar, all help push the commodity markets higher. As of Wednesday, December 21, the nearby wheat contract added 14 cents, while the March corn contract added 9 cents. Drought conditions in Argentina and continued buying by China helped keep the soy complex afloat. The January soybean contract improved a penny, while January meal dropped $7. March cotton expanded by $6.20 per hundredweight. Over in the dairy parlor, January Class 3 milk futures increased $1.31. The livestock market was mixed as February cattle added $1.90. January feeders lost a nickel in the short week, and the February lean hog contract gained $2.40. In the currency markets, the U.S. dollar index cut 81 ticks. February crude oil expanded by $3.88 per barrel. COMEX gold strengthened by $26.90 per ounce. And the Goldman Sachs commodity index, well, that was higher by nearly 9 points to finish at $597.80. Joining us now is regular market analyst Jeff French. Hi, Jeff.
How are we doing, Paul?
We're doing well. Wheat market's doing well, but it took a blizzard to get there. Is that the big story?
Yeah, I think a couple things. That was the initial trigger. I mean, we began this week in the wheat market down over $5.30 from the May high. So this has been a story that's been selling off for many months. And technically, we had a good signal this week. We were able to close above the 20-day moving average for the first time in Kansas City and in Chicago wheat for the last 2 months. So that could probably trigger some fund short covering. Funds for the last 3 months have been short wheat, looking for lower prices. But fundamentally, we had some favorable things. You know, the weather, cold temperatures coming in. You got 30% of the Kansas City wheat belt that's under winter kill threat. Now, I do understand it is December, so it is awfully hard to kill wheat during this month. But also you have Ukraine wheat plantings down 40% compared to last year. So there are some fundamental things as well as technicals that look like wheat is trying to put in a low down here. We spent this week covering shorts, and for producers that have sold wheat at higher prices, this is a good place to start re-owning it.
So if we've reversed course, have we started a trend? And do you have a range on this trend?
Well, I think it's showing some life that we're at least for now done going down. I would phrase it that the easy money to the downside in the wheat is over. And it's also what's going on politically. I mean, you have the president of Ukraine over here in the U.S. this week talking to Congress, looking for more aid. You know, it looks like that conflict over there is not de-escalating. It looks like it's escalating. So that could trigger some fund short covering. And then also you had some reinsurers in the Black Sea pull back. So it's going to get more expensive to ship vessels out of the Black Sea.
Towards this high side, what do you see in the next, we'll give you 6 weeks?
You know, I think if you can get 30 to 40 cents in the wheat, I'd be willing taker on that. You do have some big numbers coming up. The March Chicago up at $8. That'll be some resistance. But with the funds as short as many contracts as they are, these short covering rallies can be extremely violent, especially in the next 2 weeks with these holiday weeks. You have lower volume. Yeah,
lower volume, lighter trade,
Yes.
which is also impacting corn. Last couple of weeks, it seems like wheat and corn have been tied together. Did the weather do anything for corn, or is it some of those other factors that you mentioned about Russia and Ukraine? And
I think it all ties together, and you're absolutely right. Corn and wheat during the last 6 weeks have been correlated at 80% or more. So whatever wheat is doing, corn seems to follow. Now, vice versa, the funds are long corn. And it's going to be interesting to see when they come into the first year, are they going to add to that position, defend that position, and move this thing higher? You know, personally, I think this corn right now is sitting up from a technical standpoint that we could rally another 15, 20 cents pretty quick.
And given, okay, we're looking at the March contract. By then, we're going to know what the big report that comes in January. Do you think some of these positions are going to be made before that report or after?
Yeah, I mean, that's a big one. That January report kind of sets the stage for the next couple of winter months. But also what's going to be the driver is the South American weather. And right now, there are some problem areas, but in the bigger, larger growing areas, they're setting up pretty good. So that could weigh on the futures price right now. But from a technical standpoint, this corn and this wheat looks like it wants to rally here.
We have another fundamental story that we need to bring in, and we're going to bring this one in via social media and where it came in. This one, Scott in Wisconsin asked us via Facebook, is Mexico serious about only buying non-GMO corn by 2025?
You know, I think time will tell. I mean, they're serious enough that they want to start the conversation. But I think, availability and price of non-GMO corn will dictate if they're serious or not. And then we have the backup if, we could take them to court against our trade agreements. So we have a lot of time, but I think if you look at it from a price standpoint and availability, it's very expensive for non-GMO, and how much of that out there is available. Now, they've already come out and said, hey, we will still feed non-GMO corn to our livestock. But by 2025, they're trying to get out from human consumption. So time will tell, but if I was a betting man, I would say, they're not going to be able to source enough non-GMO.
Unless, but we find out if the market dictates different radical policy changes, planting strategies in the United States, and again, it's market related if you're willing to pay. But I don't know if are there that many farmers in America willing or able to fill that need? No. As of right now, there aren't, and most of the non-GMO corn is spoken for, so it's not available for export. So again, I think this is a moving target, and we got over a year to see where it goes. Let's talk about soybeans. That's next on the big hit parade. Rough Monday, but then Tuesday, Wednesday, a little better. Why? I think the beans are just range bound. They break down to 1460 in the March, and then we rally up to 1480, 1490 area. You look above 15, and it's just a wall of resistance up there. I think we've traded above it twice since June. There's just a lot of resistance up there, and we're transitioning now. I mean, I know domestically demand is off the charts. It's excellent. But now we are transitioning now to where South America becomes center of focus. I mean, you're going to see pictures and videos next week of combines rolling in the northern parts of Brazil next week combining. It really heats up January 15th to February 15th. That is their main time. So, I think moving forward here, the beans are going to be tough. And one of the biggest point is, the Brazilian farmers have old crop beans left over. It's estimated they have 4 to 5 million metric tons of old crop beans that have to come to market before their harvest. So, they're looking at 150, 180 million bushels of beans that they need to move out here in the next 6 weeks. So I think the beans, if one thing is, they're going to have the toughest challenge moving higher from these levels. And like you said, the whole hitting your head against 15 is just clearly something's there, and it hasn't busted through unless something else happens. But maybe it is Phil in Dresden, Ontario's question. Jeff's already kind of touched a little bit on it in South America, but let's ask this specifically. How are South American crops looking? You talked about Brazil a little bit. Maybe let's talk about Argentina and their supply. Will that mitigate any global supply concerns at present price levels? What calendar timelines should farmers use when to expect these supplies to come on stream? And how much 23 crops should be priced now? A lot of questions there, but South American crops, I sat in on a Scout crop conference call this week. His one-word answer for Brazil beans was outstanding. We were also asked him, what is Brazil lacking on moisture percentage-wise? He thinks 10 to 15% of the entire country of Brazil is lacking on moisture. With more rains this week, a lot of rain forecasted to fall, so we'll see if they actually do fall. But, looking at 23, November beans up here, again, that wall of resistance is at $14. So I have no problem being 30 for 40% covered. And then on the remaining bushels that you expect to produce, go out there, get through the South American weather, and buy a cheap put option in case this thing moves lower. But yeah, can Brazilian crops mitigate the crop shortage throughout the world? Time will tell. But as of right now, they're looking at probably 148 to 152 million metric ton crop. They are shooting for, a 5.6 billion bushel bean crop. So it's a big one. Well, do you remember a time when we've been so tight on a global scale? I mean, we talk about maybe not the best crops in the United States the last couple of years, and I had a family member tell me over the weekend, say, if we don't produce at least trend line, we're going to be hurting, especially he was talking about the cattle feeder next year. I mean, so we're in a precarious spot where we actually need Brazil and South America to produce. And you've seen price, prices, when you have a short crop, price is responsible for demand destruction. It's got to go to a point where you start to see demand start to come down. And,
we've seen big run-ups, and we'll have to see if the demand holds up with that.
We didn't even mention China, but we'll discuss that. We have a couple of questions about that from Market Plus. Let's talk about the other C commodity, and that's cotton. This has been in a bearish trend for a long time after having a great run. Let's see, in our shortened week, $6 up 7.5%. Can the party continue on cotton?
It's been a very violent move up. A lot of it has to do with the stock market. Stock market had a pretty good risk on, buy everything type of day here midweek. March has got to get above 90 cents, and then this thing can probably run pretty good. But you look at the new crop, December 23 cotton, it just doesn't work at 83 cents when you have $14 beans. So, a long time to come here, but I think this cotton needs to move higher to buy acres, especially away from $14 beans. So I look for it to move higher.
And that's what it did last year, but yeah, we're far from that right now.
A lot of time.
Livestock, back to the blizzard. Is that impacting? Trade was light. It's also holidays. But live cattle-wise, cash has been performing well. Futures, too?
Cattle made a fresh 8-year high today. This is rare air. But, yeah, it's a weather rally. We have 2 weeks of holidays right now. The packer is short bought with these storms making logistics extremely tough for the cattlemen. I wouldn't want to be the first one to sell here. The charts look good. There's no reason that I see that the charts can't run up to the November 2014 highs in that 170 area. Not meaning that we're going to, but from a chart standpoint, this price action looks very friendly. Now, from a producer standpoint, we've been here before, but we didn't spend too much time up here. So this is a time for producers to use the rally to get some hedges down lower in case the economy in the next 6 months doesn't stand as tough as we think it will.
If I'm the cattleman right now, am I having to pay attention during Christmas and New Year's? Is this going to move quickly then, or do you see it more in January?
Well, I think they never, they don't stop paying attention anytime. But yeah, when you're putting in 8-year highs, you need to be paying attention.
All right. Feeders now. It's tough to feed in the conditions that we're seeing, but we're seeing some moisture in some of those areas. Does that give you reason to believe what cattle on feed reports and anecdotal stories of that? Yes, there is more holdback in some of these feeders right now.
The feeders have had an excellent rally. We're up here at multi-year highs. And I just take a step back and I look at the feeder cattle. I have to look at corn prices. And in the near term, I think the corn could rally here in the next 3 to 4 weeks, which could put feeder cattle under pressure. The number to watch is 182 in that January. And we closed above it here this week. But if we start taking that out, that opens the door pretty quick to $5 or $7 pullbacks. But, fundamentally, this cattle complex is in strong hands, and it's going to be for the next probably 12 to 18 months. So use pullbacks to buy, but don't be chasing rallies.
Are you chasing any rally in hogs?
Again, new contracts highs in the deferreds. We got a hog and pig report end of this week. Weights are down. PD is still rearing its head around there. So, I think the hogs kind of want to get into the cattle rally here, what we saw this week. I just look at, China. The hog prices in China here the last 2 weeks have dropped 25%. We've seen a real big pullback in exports. So I look at, the deferred contracts above $100 in the hogs. Again, these are good places to be putting some hedges on.
There was a report today about U.S. net farm income in the Wall Street Journal saying that it is going to be $160.5 billion this year, boosted by increased prices for farm goods ranging from wheat to milk. As we sit around the holiday table, is it a good time in rural America to be in agriculture?
Oh, I think it is. Anytime you can be in agriculture is a good time. There are tougher times, but it's always a good time. It's going to be an expensive crop, but the last few years have been extremely profitable. And I think there's better years to come, and yeah, it's a good time to be.
Are there things I can do to make it merrier in 23?
I think you get some crops sold here. You got December 23 corn right now is 50 cents higher than it was this time last year, and $1.50 higher than 2 years ago this time. So we are at elevated levels, and I think you get a little bit of new crop booked here.
All right. Well, we'll put that in your stocking, a couple of 23 calls. How about that?
All right.
All right. Jeff French, everybody, thank you.
Thank you. Merry Christmas.
Merry Christmas to you as well. And we are going to put a pause on this analysis and continue our discussion. Yes, we have more to go in Market Plus. Find that on our website of markettomarket.org. We have that in podcast and also on YouTube. All of these resources are free, by the way. If you're getting a chance to relax at home during the holiday season, put your feet up and catch up with some of our podcasts. We have 3 options: the Market Analysis, the Market Plus, and the MTOM. That's where you go. Follow today to get your podcast. That's where you go if you want to get your podcast. Next week, we are going to look at the highs and lows of agriculture during 2022. Thank you so much for watching, and have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.